It's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. Great to have you join us for the TGIF edition. Let's kick off your morning now with the markets. Let's look at what's happening in oil market. They'll see oil prices inch higher in Asian trade today on hopes for further relaxation of COVID curbs in China, which could help demand recover in the world's second biggest economy, though a firmer U.S. dollar capped the gains. We see Brent crude there was up about 20 cents to 0.23% at $87.08 per barrel in early trade, after earlier falling to $86.59 per barrel. U.S. WTI crude futures gained 6 cents to $81.28 per barrel after slipping to $80.88 earlier in the session. Both benchmarks were on track for their first weekly gain after 3 consecutive weeks of decline. China is set to announce an easing of its COVID-19 quarantine protocols in coming days and a reduction in mass testing. Sources familiar with the matter which confirmed this, which would be a major shift in policy following the widespread protests and public anger over the world's toughest curbs. And to all the markets now, we'll see Chicago wheat futures lost ground today and set for a 4th straight weekly drop, pressured by ample Black Sea supplies that are giving stiff competition to U.S. exporters. The most active wheat contract on the Chicago Board of Trade slid about 0.7% to $7.77 for a quarter of a bushel, and soybeans added about 0.3% to $14.33 for half a bushel, and corn gave about 0.1% to $6.60 a bushel. For the week, wheat is down around 2.5%, while corn has dropped 1.7%, and soybeans, little change. A record wheat production in Russia, the world's biggest exporter, and ample supplies elsewhere from the Black Sea region are adding pressure on U.S. futures. The U.S. Agriculture Department said export sales of wheat totaled 162,000 tons in the week ended November 24th, well below the low end of analysts' forecasts that range from 300,000 to 725,000 tons. And back here, the Minister of Budget and National Planning, Mrs. Zainab Ahmed, says Nigeria is in good economic standing and is not broke. Mrs. Ahmed spoke at the 6th edition of President Muhammadu Buhari's scorecard organized by the Ministry of Information in Abuja. She says a total of 1.98 trillion naira was distributed as share of the 13% oil derivation backlog paid to all producing states. Do take a listen.
The 6th edition of the presentation of President Muhammadu Buhari's scorecard features the Minister of Finance, Budget and National Planning, Mrs. Zainab Ahmed. She goes straight to present a review of the economy under the administration since 2015, stating emphatically that the country is not broke.
I recall that we have witnessed 2 recessions during the tenure of this administration. The non-oil revenue share of funding the federal government, we've been able to succeed in turning it around. The non-oil revenue used to contribute between 30 to 35% to the federal budget. Now it is 73% financing of the federal budget. And that's very significant. That is to emphasize that the non-oil sector is growing and contributing significant, and that is what is really holding the economy now, that it is the oil sector that is lagging behind.
She goes on to give a breakdown of the disbursements of funds to the 3 tiers of government from the Federation Accounts Allocation Committee since 2015, especially the allocations to oil-producing states.
With regards to support to subnational governments, the ministry has, with the support of His Excellency the President, been able to disburse 5.03 trillion naira and an additional $3.4 billion to states by the federal government over the lifetime of this administration. And I'll come to the details of how this has happened. Each of these payments has distinct payment terms. Some of them are grants, some of them are very soft loans with very low interest rates as well as very long tenors to enable the states to manage their economies well and contribute to the growth of the nation.
On capital budget releases for the 2022 budget, the minister says that the government has released 1.7 trillion naira out of the 2.7 trillion naira.
And now to our first conversation. Well, with inflation running hot globally, investors are torn on how to hedge, against inflation. We know there's been talk about gold, real estate being a great hedge, but is real estate still that hedge, for inflation? Let's talk to Dr. Stephen Akintayo now, MD, GTEx Holdings, joining us via Zoom. Great to have you on the program. Good morning.
Morning. Thank you for having me.
So I see, with how unpredictable the real estate market is, you are still quite bullish on that market.
Well, I'm not sure, but we're trying. Entrepreneurs, our DNA is to thrive in adversity. That's really what entrepreneurship is about. You want to do your best to continue to be optimistic and looking for solutions even in a tough season. The real estate sector in Nigeria is slowing down a bit. I don't know what numbers you guys have, but in terms of sales and people investing in that sector, we're having some slowdown, but we're positive that it's definitely going to pick up as usual.
Yeah, pick up as usual because right now, incomes are squeezed. We're seeing rate hikes globally, at this time. But let's look at some of your offerings. Now, they seem almost too good to be true, with the way inflation is going right now. How sure are you, that you can actually deliver on some of these projects?
Well, one of the key new decisions we've decided to take is to peg our property to the dollar price. A lot of construction materials used for building are imported. And, we've seen situations where some of our colleagues who peg in Naira are struggling to deliver on what they promise customers. So for us is that if you're buying a 2-bedroom, for example, if the offer is $50,000, then that's what you're paying. You can always pay it in Naira, the Naira equivalent, and you know what is the balance in dollars. This way we can be consistent. This way we don't need to go back to our subscribers to say, hey, there's inflation. Oh, the Naira is weak to the dollar, so pay us more. And integrity is very key to business. So for us, that's a strategy that has helped us to keep, to our word. And that's the stance we're taking.
We're obviously seeing a lot of volatility, in the housing market globally. What do you foresee, the housing sector for Nigeria?
Well, I'm already seeing, again, like I said, I'm not the Bureau of Statistics, but I'm seeing a slow trend. My argument has always been that you cannot have a real estate crash in a country like Nigeria because there's a huge housing deficit. You only have that in developed countries because they don't have deficits in some countries. And so during recession, during tough economic situations, you see a lot of people who probably used to live in big houses, having to even merge with other people and things like that. So that's why you then have those kind of bubble bust. But Nigeria has millions in housing deficits. Some data shows 20 million, some show 26, some show 10 or 15. But either way, we all agree that the deficit run into millions. And when you look at even the private sector, construction houses that we're building right now, they are not even up to millions across the country. When you look at all the federal government schemes and programs, it's not even up to million in terms of the unit of houses being constructed. So you definitely cannot have a bust or a crash, but you can have a slow trend in purchases because of elections, the way politicians talk, investors are scared, and mind you, major investors in the housing market are Nigerians in diaspora. They're the ones who are able to afford, this season. And they are also affected because they also earn outside Nigeria. So the issue of recession across the globe affects them, as well as what's happening in terms of their fear for the election.
All right. Well, talking about rate hikes, we've seen the Central Bank of Nigeria here. They've raised rates a lot, this year. And the last one, we got about 50 basis points, about 100 basis points actually. Not as large as the 150 we got before. How is that impacting the sector right now?
Honestly, I am personally excited about the Naira redesign, and I support that policy, but not the rate hike. I don't think so, because I feel the redesign of Naira is trying to achieve the same thing. And we've seen a lot of compliance, with people having to remit money to banks. And I don't think they needed to do to that volume. We can see how the U.S. Treasury has gradually, in a very slow manner, raised their own interest rates. I think we should, if we have to do that as well. But in terms of how has it affected the sector, I think it has, because, mind you, a lot of people are relying on taking loans to construct houses, and contractors also having to take loans to be able to partner with developers to execute some of this building. And if you are raising interest rates, it just affects their profit margin. It affects their overall bottom line. So for me, I'm not sure it was the right decision. But again, I'm not the CBN governor, so he has the right to make, and the people in charge of monetary policy. But it's affecting big time. But in our company, we don't take loan in the Nigerian market. In other countries that we operate, yes, we are open to that, but not in Nigeria. And for us, it's we just feel that the banking sector is not as supportive. And I've said this publicly many times. I think they are not supportive of our sector. I've seen situations where banks take over people's estates without being considerate about the other investors in that particular estate, and they just take over the entire thing. And so, seeing those kind of experience, I just decided that our company will not going to take any loan from any bank for our own construct.
And obviously, we know the central bankers are struggling, right now, and obviously banks struggling with non-performing loans and all of that. So that will make it a little difficult, for them also. But let's talk about green smart housing. Is that looking like a reality for Nigerian market?
Well, it is. I mean, what I think will happen, the same revolution that happened with the telecoms, where we were slow to adopt that, but I mean, Nigeria is way ahead in terms of technology, telecommunication technology, and we're more advanced. I think the same will happen. I just attended the UN Climate Change COP27 in Egypt, and that's been the conversation, adaptation, and I think Africa is ready. I mean, if you look at even what Egypt is doing, they have housing project running to almost 30 million. You won't believe it, housing units being built. It's massive what Egypt is doing and how Egypt is trying to adapt to climate change. And I think Nigeria can be in the forefront. We are the first company to commit to building 25,000 green and smart homes in Nigeria. And we're excited that we stuck to that idea. It's expensive, because having to convert waste to biogas, rely on solar and other alternative wind energy, it's not one of those easy things. So we have a 2035 goal. By the year 2035, we will have 25,000 green and smart homes, and they will be zero carbon emission. But we need money to make this happen. The last time our finance team told us it's going to cost us as much as $20 billion to do that, because we want to put a golf course, polo club, have hotels, shopping malls in those places. We still have 13 years to go. We're still at the beginning stage. But we're excited that we are a company of the future, and there's nothing wrong being ahead of everyone else.
All right, talking about what you're, looking to add, some of these essays. Some believe that your housing solutions are for the rich and the affluent. What do you say to them?
I think they are right. Housing generally is quite expensive anywhere in the world. I think it's the responsibility of the government, as well as other institutions, to create what we call accessibility to housing. I'll give you an example. Here's a 2-bedroom. Now, when you look at the dollar price of this 2-bedroom, in anywhere in the US, let's even take Dallas, which is one of those states we operate. In Dallas, the cost of 2-bedroom is twice what you're seeing on your screen. But why is it more accessible? It's because I have 30 years to pay. I only have to bring 20% of that amount. In the UK, if I'm a first-time home buyer, I only even need to bring 10% of the amount. And I'll have the government support me with the remaining 10%, then I get a lender to give me the remaining 80%. And I have 20 to 30 years to pay back. So for me, I think housing generally, globally, is not really cheap. But what government and finance institutions have done is to make it accessible even to those who are not rich. And we have to face that reality, because part of why we have attracted quacks in our sector is because we're playing to the gallery with the conversation of, I'm just going to be cheap. I'm, affordable housing. And we all know that is not in the hands of any single developer, right, to make housing affordable in Nigeria. It's just the truth. But of course, we can keep playing that language just to make customers feel good. But the reality is that it's not in your hands. If it's gone, because you are not the manufacturer of the materials, the cost of buying land. If in some cases you pay for land twice. You pay family, you pay government to get, the land perfected. So these are factors that affect the cost. And we hope government will come in to make it more accessible. But what we have now is a program that allows people to have up to 3 years. And at any point, once they've done up to 30% that they're struggling to continue, we link them up with a credible mortgage company that then supports their ability to then extend the payment from 3 years to up to 15 years. And I think that's the kind of creative concept that we are bringing to the market.
And obviously, affordable housing is very critical, right now, knowing that 133 million Nigerians are multidimensionally poor, at this time. We definitely need affordable housing. But let's talk about your vision for 2035.
I will even say accessible housing, right? Because the affordable is relative, right? But can I even still access it? Even if the price is a bit higher, and then I have enough time to spread, which is what's happening all over the place.
Yeah, enough time, to spread is, also much needed too. Let's talk about your vision now for 2035. Still, a dozen years away. We've seen you, continuous expansion into other countries and continents. Do you think you'll still have a Nigerian or African face, at that time?
Absolutely. I feel that we definitely cannot achieve the vision 2035 without foreign direct investment. We need a lot of investment to do that, particularly because of the model, the concept. For example, I'll give you an example. One of the technology we've seen that we want to adopt is a machine that converts plastic to energy, right? However, that machine alone goes for over $6 million, right? And that's just to power one estate out of almost 200 estates we will have hopefully by the year 2035. So when you look at the cost implication, you definitely need a lot of foreign direct investment, even grants as well, However, for us is to say that if our success in Dubai, in UK, and US, gives a lot of these investors who are even based in this country to say, okay, we know you here. We've seen what you're doing here. So we can trust you when you say you have this big project in Nigeria and you need us to invest. And so for us, we feel that our international expansion, it gives us a lot of credibility abroad, enough to attract a lot of investors to believe in our vision and to partner with us in our Nigerian quest.
Let's talk about your offerings now, and when exactly will the promotion kick off, and how can people actually access it?
Beautiful. So we already have a lot of people who have started taking advantage, but we're doing a global virtual launch on Saturday, 10th of December, and we're inviting the general public, particular investors, to come. And we will be able to break down the offers. It's an off-plan sales. Again, like I told you, we try our best not to take loan because experiences we've had is not encouraging. And so for us, what we've done is to say, you know what we'll give you opportunity to pay us gradually. We'll mobilize to sites in March of 2023 and start building gradually. Those who pay outright by early 2024 will even get keys to their house. And of course, others who are paying installment for 3 years, once they are done completing their payment, they then get a key to their house. And we've made it such that we have 5 locations in Lagos. We have Abeokuta, we have Asaba, we have Abuja. So you have that option of where you want to buy, whether it's Isheri or Obudu or Ikorodu or Ibejuleki. So there is that choice. We already have normal, ready to move in, units that we currently market, and they are all over Lagos, and we're spreading to other locations as well. But those ones is you're having to pay outright because the houses is already, and you just pay fully and you move in. But this ones gives you opportunity for accessibility by flexible payment. And it also gives us enough time for us to also deliver. So a 3-year window period is a fantastic time. And what will be happening to investors is that in that 3 years, you're almost having 100% return on investment, because by the time the house is ready, the value of the property will be almost 100% what it was 3 years ago when you started paying. And remember, you had that flexible payment to pay. And it's one of the most amazing ways. And what we've also done is to have a subsidiary called GTEX Suites that is able to help you rent out your apartment in the case where you are doing this for investment. So we're able to help you get tenants, and you are able to get regular cash flow. And that's really one of the major reasons why people invest in real estate, is that consistent cash flow that can keep coming in. You have tenants paying you rent, and you're making more.
All right, Dr. Akintayo, I know at some point you're going to give me some 30-year plan. I'll be expecting that. Thank you so much, Dr. Stephen Akintayo, MD, GTEX Holdings.
Thank you for having us. I appreciate it. Can I just chip in that those who want to register for the event can visit www.gtexhomes.com/1000 units. So if you want to join us for the webinar on Saturday 10th by 5 p.m., again, the site is www.gtexhomes.com/1000 units. So you can sign up, it's free, and we'll be able to give you a lot more detail about the housing unit, 1,000 housing unit first phase of the 25,000 housing units we are doing the next 13 years.
Fantastic. Thank you so much. Thank you. Enjoy the rest of your day. Welcome back to watching Business Morning live on Channels Television. Now to our next conversation. We saw Fitch Ratings there downgraded the long-term issuer default ratings of 7 Nigerian banks and 2 bank holding companies to B- from B. The outlooks are stable. But let's talk to Damilola Lukman now, a banking sector analyst at Chapel Hill Denham. Join us via Zoom. Great to have you on the program. Hello, Damilola.
Yeah, good to have me, Ladi.
Fantastic. If you can hear me, what factors normally lead to, these kind of downgrades?
Yeah, for this specific downgrade, each had mentioned that the downgrade was on the back of the downgrade of Nigeria's sovereign rating, which was also downgraded from B to B minus, as the case most times is most corporate in a particular country, usually have maybe a rating, somewhat similar to sovereign. Particularly for Nigerian banks, because of their exposure to the sovereign, most banks hold treasury bill and bond instruments, which are issued by the sovereign. And also in terms of the cash reserve ratio as well, the cash reserve ratio is pegged at about the 2.5%, but we've seen, most banks, overshoot that. So because of their exposure to both the Apex banks in terms of cash reserve rating, and also their exposure in terms of holding bonds and NTB instruments, Fitch just felt that, they have a close relationship with the sovereign, and whatever affect the sovereign will most likely affect, these banks and the downgrade. They also measured the operating environment as well. Fitch, forecast that Nigeria's economic growth in 2023 will be 3.1%, which is largely impressive. But they also alluded to the inflationary concerns, also paucity of FX, paucity of foreign investor flows into the economy, and also the FX illiquidity as well as major factors, underpinning the downgrade of those banks. So it's both exposure, to the sovereign and also the tough operating environment.
All right, we got that information there. The CBN issued new guidelines for getting a bank license for new and pending applications. Looks like securing a bank license is going to get more difficult.
Yes, it is. Most likely will get more difficult, on the back of the new guidelines. But I think the guideline is a cost for share, as the guideline seeks to tighten the loose ends, particularly around fraud, risk, exposures to fraud, around terrorism funding, and also proliferation funding as well. So this is CBN just ensuring that Nigerian banking system is ready to ward off attacks from fraud, from terrorism and whatnot. So I think it's a welcome development, and it's good it's happening at this time.
We also got information from the World Bank saying that financial flows to Nigeria and other sub-Saharan African countries is slowing down, at this time. What would you say is responsible for this?
Year 2022 has been laced with elevated interest rate environment, both in developed markets and also in developing markets as well. So what we've seen is massive outflows of funds or foreign portfolio investment, from sub-Saharan markets to safer havens, which at the moment, offer very attractive yield, also on the back of the elevated interest rate environment over there. And if you also take into cognizance as well the tough operating environment as well, I think most investors are just comfortable, plowing back their funds to the so-called safer havens, in the developed market, and they are just reducing their exposure to the interest rate risk currently obtainable, in sub-Saharan markets, and also the pass-through effect of the monetary tightening, on economic growth, in most of these sub-Saharan markets as well. And maybe going into 2023, if we see maybe a loosening monetary policy and a better macroeconomic environment, in most sub-Saharan markets, then we can start to see an increase in foreign portfolio flows into this market.
All right. Still looking at the Fitch downgrades there, how do you see this impacting the share price, of these financial services stocks?
For me, I think the share price will be a bit muted, as most investors, have priced in, some of this risk into the share price of this company. Currently, most banks, are trading very close to their year-to-date lows, which means, investors are pretty much pricing, some of this risk and some of the sentiment, into the pricing. So I think markets will still continue to trade sideways, and we won't see any significant reaction, to this news in the share price of most tier 1 Nigerian banks.
All right, we'll be watching out for all of that. Thank you so much. That was Damilola Olukono there, banking sector analyst with Chapel Hill Denham. Thank you so much.
Thank you for having me, Ladi.
All right, and talking about banking stocks, yeah, we saw the banking counter there performed very well yesterday. We have Anyete Ede to give us the details for the close yesterday. Great to have you, Anyete. Thank God it's Friday.
Thank God it's Friday, TGIF. And we were talking about the markets, the predictions for the market or the outlook. Actually, let me just tell you, the market should have been in a positive territory for the start of December,
right.
But it was just the
0.01.
Yes. No, that 0.01% decline is attributed to MTN. Nigeria, of course, that's almost, it has the value of almost the Nigerian banks that are in the banking sector industry. So that's the reason why the market retreated.
So we can't really call it a massive loss. Just,
no. It's not really just profit taking. Yeah. I'll give you the details. Yeah.
Right.
But first, we will be starting with the fixed income market.
Okay.
Okay. So for the fixed income market that we just discussed here, at the close of Thursday's trading session, this is how it turned out. It was in the bullish sentiment. That's how it turned out for that market. We had the highest number of attraction being on the April 18, 2037 paper, which had 7 deals, as you can see on the board there. The value is 2.8 billion naira, and then the percentage, the price high in percentage term is about 101.56%. So that's how that market went for the bonds market. Now, the total number of deals carried out there was 28, and we had the average yield there, it had contracted by 8 basis points to 14.3%. So that's for the investors to chew on that market. Moving over to the Treasury bills market. The Treasury bills market, it was on the flip side, it was on the bearish side. Average yield there expanded by 181 basis points to 11%. But looking at the board, what we have here, the highest number of concentration was on the 23rd of November, 2023, which is for next year. It had 8 deals, and then when you take a look at the cumulative board here, the total number of deals carried out on that segment was 10. That's on the FMDQ exchange for Thursday. Now let's move over to the OMO market. The OMO market average yield there was unchanged, and it was unchanged at 10%. But when you take a look at the board here, the attraction was on the 28th of March, 2023 paper, which is for next year. It had only deal stats. That was the loaner on that segment. Now moving over to the central bank special bills, it was also a loaner. It had just 2 deals, and then the total value there was 10 billion naira. Now to drill down more on the fixed income market, let's talk to Sodiq Safriyu, investment research analyst at Meristem Securities Limited. Thank you for joining us, Sodiq.
Thank you for having me. Good morning.
Okay, so now we are in the new month, and yesterday we drilled down on the equities market, which sometimes goes in correlation with the fixed income market. Now, can you tell us all about the month of November, how investors' sentiment was for the month of November, and today's Friday, so we're into the last trading day of the week, but the first week of December will be starting next week. So just give us a review of November and an outlook for the month of December.
All right, thank you very much. So yes, for the month of November, as you rightly mentioned, the sentiment there, it was sort of mixed, but largely in the secondary market, it was bearish. And on the primary markets, we saw rates still move upward. So in the treasury bills, on the treasury bills front, we had 2 auctions in November, right? For the first auction, we saw rates on 91-day and 182-day remain flat at 6.5% and 8.05% respectively, while the one for 364-day declined to 13.99. But on the second auction, 91 and 182-day instruments still stayed flat, but then we saw an increase in the rate for the 364-day to 14.84. That was largely due to higher subscription. So when we look at it across these instruments, the subscription is more tilted to the 364-day instrument. You might want to ask why that is, but for me, I believe that the government is, as much as possible, due to the restructuring plan, trying to play, or they are more interested in longer term instruments. So that sentiment also, the investors follow that sentiment in the month of, November. That was on the primary market auction. On the secondary market, we also saw, that bearish sentiment.
Sorry, Sadiq, are you still there? Can you hear us? Hello, Sadiq. Okay, I think we lost him there. Okay, so I think for that market we've had that analysis. So now let's move over to the equities markets. We were talking about the equities market. So now this percentage, the decline, the reds that you see here is attributed to MTN Nigeria's loss. MTN Nigeria had retreated. It went down by just a marginal loss, but that marginal loss was enough to pull the market back by 0.01%, which is just about 3.4 basis points. Then in terms of valuation terms, it lost about 1.85 billion naira, almost 2 billion naira at the close of Thursday's trading session. So this is how it turned out. Now flipping over to the sectoral performance, this is how it turned out. What we call the FUGAs, the likes of First Bank, Union Bank, GT Bank, Access, and Zenith Bank, they led the market. About 4 out of those 5 tier 1 lenders, we're talking about the tier 1 banking components. So they lifted this counter up by more than 2% at the close of Thursday's trading session, as well as the consumer goods sector. This is thanks to Nigerian breweries. Investors had priced, they took advantage of the recent losses on that counter to make some bargain hunting there. But on the flip side, this is what you have for the other counters of the NGX sectoral performance. Industrial goods was down, it was unchanged, but a little bit in the red. As you can see, the 0.00% decline there. Insurance sector was also not spared, while the oil and gas sector, that's no thanks to some of its key bellwethers there. Now, let's move over to the activity chart. In terms of activity, the number of volume, let's move over to the activity chart there. The total number of volume, the volume of shares that were traded for that day, it was up by 61.55%, while the value was up by more than 115.6%, while the deals was down by 4.77% for that market. So now for that market, we still had, it was a tie in terms of the gainers and the losers. We had 11 gainers as well as 11 losers. The likes of Honeywell, Honeywell topped the list of losers, while the likes of UPDC, real estate, as well as Nigerian breweries were the top gainers for that market. So that's it for the market. Year to date, we're still within the 11% region, while the market is still looking positive at the moment. Let's move over to the smaller unlisted securities market. It had a flattish close for Thursday. That's a second day of flat close for that market. Investors seem to be a little bit quiet for their preference for the smaller unlisted securities market. The market cap, as you can see here, is still falling below that 1 trillion naira level, which it had reached about a couple of months ago, about 923.44 billion naira. Unchanged is what the market's index, securities index is. While when you take a look at the volume, what you had for the volume, it was flat. The volume was down. This is what it traded at the close of Thursday's trading session. No gainer, no loser for that market. But when you take a look at the top trades, for a second time this week, back to back, we had Friesland, Campina, Wamco being the most traded securities for that market at the close of Thursday's trading session. So that's it for that market, Ladi.
Right.
We will be looking out for how Friday, the last trading day for the week, but then the first 2 days of December turns out for all the markets.
Exactly. I'm sure you're expecting some kind of gain today.
Well, let me be precise. I think it's a little bit dicey, but at the moment, I still expect the market to continue to rise for the equities market, but the fixed income market will be a quiet trading by investors, because investors are trying to be cautious as the year comes to an end.
All right, cautious optimism there. Thank you so much, Anyete, there, giving us the details for the markets. Let's head on to other markets now. See Bitcoin there holding up strong at that 16K level. wondering if it's going to hold. But the sentiment now for the crypto space, we see it's 27 points there, fear, trying to get to that 30-point level. We'll see if that actually happens. Well, we're going into the weekend now. Who knows what's going to happen with Bitcoin, because we know the weekends normally turn out to be quite interesting. Let's look at the market cap. Today, see it, $851 billion, down about 0.88%. So we're seeing some sell-offs now in the market. 24-hour volume traded, Bitcoin and the altcoins, it's down 10.43% this morning. Bitcoin dominance sitting at 38.23%. Let's look at the price of Bitcoin this morning now. We see it's around that 16,900 level. Price of Bitcoin this morning sits down 0.95%, $16,940, and the volume traded in Bitcoin, $21.83 billion. It did lose that 17K level it hit last time when we got the speech from the U.S. Fed chief there, saying that the rate hikes for December might not be as big as what we've been getting. So we saw Bitcoin react to that. Global markets actually reacted, hit 17K, about $17,100. Let's look at the price of Ethereum, $1,274, down 0.76%. We see Ethereum holding this $1,000 level quite strongly now, but at 1.2, remains to be seen what happens in the weekend. Lower volume this morning, $6.40 billion. Let's look at the top alts by market cap. We see it's all red on that counter there with BNB, Binance coin there, down 3.69%. It's the biggest down of this morning on the top alts for market cap. Cardano, 31 cents, down 1%. And we see XRP losing that 40-cent level, down 2.83%. This morning. Let's bring in Solomon Amunde now, a digital market analyst. Tell us what's happening. Hello, Solomon.
Yeah, good morning, Ladi. Good morning.
Good morning, Solomon. TGIF, great to have you. So we're seeing Bitcoin there losing that 17K level. What are you seeing driving the market right now?
Yeah, currently the market has been trading sideways for almost a month since the FTX crash. We've been playing between 15K and about $17,300. So I still believe we'll still trade sideways for a while, probably till the end of December. We are hoping to break out of the sideways range to go above 17.5, and hopefully we can reclaim 19K and see Bitcoin above 20K once more. But for now, we are still trading sideways.
And I know you've been in this market for a while. What is December normally like? Talking about price action in the market.
Yeah, most times December is bearish. Looking at 2018 December, it was bearish. 2019 November to December, it was bearish. 2020 was when we saw a green market. So basically, December is quite.
All right. Well, quite a trend there we're seeing for December. But we did get that information yesterday from Finance Minister there, saying that crypto and digital assets in Nigeria are going to get taxed. How is the community, reacting to that?
All right. So the first thing is the government saying it will tax cryptocurrencies and digital assets goes to reinforce the fact that cryptocurrency is 100% legal, and it's also recognized by the federal government of Nigeria. That's the very first thing. Then the second thing is being taxed as long as basically on profits made from trades. Traders will basically have no issues with that being taxed. Then also it will be very, very interesting to see how the crypto taxation would play out, because it's also very, very technical to be able to tax profits made by traders, because as we all know, most traders aren't profitable. Most persons trading crypto, forex, digital assets, they are not really profitable. It's barely 10% of the traders that are profitable. So overall, it will be very, very interesting to see how the government is going to structure this whole crypto taxation and digital assets taxation.
And looking at other countries, that are taxing crypto now, we know India, they're taxing, crypto in the country. right now. How has that played out? Have they been successful, with taxing, profits or the traders that just hold? Do they also get taxed?
In India, it's not been fair. What they're doing there, it's not fair because one, the tax is actually extremely high. And in some other countries, they tax irrespective of if you make a profit or a loss, which isn't fair. And it actually goes a long way to discourage most traders. For India, I don't think it's going so well in terms of taxing the traders. And I think the exchanges are helping a lot to make that possible. That's why I'm 100% waiting to see how the government is going to structure, how they can come up with the means to tax traders in Nigeria.
All right, we'll be watching out for that. Do you think the crypto exchanges will be somehow involved, in this taxing?
If the government wants to be 100% successful in taxing crypto traders, the crypto exchanges need to be 100% involved. That's the only way that they can be able to achieve this in Nigeria. If the exchanges aren't actively involved, it becomes extremely difficult for them to tax any trader within cryptocurrencies in Nigeria. So yes, they have to get the exchanges involved if they want to be successful.
Right, so much to unpack there for that whole crypto tax bill. But we're going to the weekend now. What are you expecting, for price action and into next week?
Yeah, so far so good. The weekend is looking good. It's looking good. Bitcoin is still trying to go above 17K. And Dogecoin, which seems like it somehow affects the movement of the market, it's looking quite strong. So I'm expecting the weekend to close at Bitcoin sitting pretty much above $16,700. And next week, we will make a run for about $17,400 again. That's what I'm expecting.
All right, Solomon Amunde, thank you so much for giving us the details there for price movement in the market. Thank you so much.
Thank you.
All right, let's look at the top 5 gainers this morning. There we see the Ethereum proof of work there. Ethereum Power topping the counter there, up 20.42% at $4.02. We see some traders actually torn there between buying, Ethereum Power. They say you can just, buy Ethereum Classic if you want the proof of work, mechanism, or you could just buy Ethereum if you want to see the whole POS proof of stake platform there. But then we see LUNC, that one's been hit hard, from the liquidity with Luna there. It's up 13.67%, now becoming a coin that's less than a cent at this time. GMX, this has been rising for a couple of weeks now. It's at $54.85, up 9.24%. And we see LRC, Loopring, one of the oldies in the crypto space there, 26 cents, up 6.18% this morning. Let's look at the top 5 losers there. We see BNX there still on the losers counter. It was also yesterday. It's down 5.81%. And Doge, seeing some sell-off with Doge there at 9 cents, down 4.18%. CurveDAO, 63 cents, down 4.05%. And 1inch, a decentralized exchange there, that's down 3.91%. And STX stacks there, 24 cents, down 3.20%. So it's not double-digit losses this morning. Still, quite moderate at what we're seeing in the crypto space. We're still watching global action there with the global equities market go. We still have that correlation between the crypto market and global equities market. So we'll be watching how that performs and how that trickles down into the crypto space into the weekend. All right, that's it for the markets. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Thank you so much for watching. You can watch this show again and all our other productions on our YouTube page. Just flip over to YouTube, search for Channels Television, flip to our videos. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Enjoy the weekend.